Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Wednesday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick with you this morning. Before I get started, take a split second out of your day. Drop us a like. Smash that like button. Thank you very much. We appreciate all the likes that we get on YouTube. If you're watching on Twitch or on Twitter, hop on over to YouTube. Drop us a like. We appreciate that. On today's show, we're going to talk about that stat that we've all heard, right? We've all heard that stat. 90% of day traders lose money. Where did that stat come from? I don't know. Is it true? I don't know. We'll talk about that. We'll also talk about earnings. We had ZScaler. We had Dick's. We had Nordstrom. GameStop. Actually, the meme stocks were moving yesterday, but I didn't see the headline until later. That GameStop is apparently getting into NFTs. We'll talk about that headline as well because we're not quite convinced that it's real. I don't know. The website looks kind of strange. Anyway, so GameStop, meme stocks moving again today. Our guest is Chuck Self. He is with iSectors. He would join the show at 8:35. Don't forget, everyone, we are doing a giveaway, a 100,000 subscriber giveaway, where we're giving away a free share of Tesla. How do you enter? You click on the link in the description and you enter the YouTube code SLIMERAZ. SLIMERAZ is the YouTube code. Enter, click on that link, and you will win, or you could not, you will win. You could win a free share of Tesla. Let's throw it to Joel now. Joel, how we doing this morning in the markets?
Doing well, straight up from that close at 4 o'clock. We're up 12 handles, 97.50. Didn't even see the close at 85.50, nor yesterday's high. Just an update, down day, last 4 days. Crude, that's in the red by 24 cents at 65.83. Gold's doing good. Finally cleared 1,900, up $11.60 at 1909.60. Silver in the 28 handle. Let's see if it can stay there. Up 15 cents at 28.21. Bitcoin, you talk about an up and down market. Up today, $2,600 at 39,300. Quoting the futures markets there, folks. And Ethereum, back up 13%. $325 at 2,839. Triple D, kind of a yo-yo market over the last couple sessions. How you looking this morning?
Not even really yo-yo. Well, I guess you could say it's yo-yo chopping around. A little choppy. I'm looking okay. Yesterday morning at this time, I was looking like I was underwater. I actually ended up okay somehow. It was just a really good open. I had a couple stocks that opened significantly higher for me, and some of my longs, and I had a couple shorts on that actually opened lower. So I actually, in the pre-market, was looking rough, but then the open happened. I was like, oh, I ended up okay somehow. Sometimes funny days like that. You know, I'm always trade market neutral, so I have equal longs and equal shorts. So I'm, on any given day, it's not really the market that's, as long as I'm hedged correctly, it's not really the market's going to impact my day trading performance. It's my stock selection. So today I'm kind of looking okay so far, but you never really know until you get the open because a lot of stocks I have are pretty illiquid.
And I'm going to pat myself on the back for reading the tape because you usually don't leave during a guest. And I was just looking at you, and I haven't seen you in person in a while. And I'm like, I don't wonder if Dennis is okay. And you actually, and I texted you during the show, and you caught it. I could just tell, but this is a good segue into something that you wanted to discuss. A stat that you saw from Steve Burns on Twitter.
He just retweeted it widely, not calling out Steve Burns. We know Steve; he's a great guy. I don't know if he's been on the show before.
Let's get him on
Widely
the
followed.
show.
But what he tweeted, and maybe you can show the tweet, Spencer, or I can just read it to you if you don't have it in front of you.
I'll bring it up.
But it's a widely heard stat. And what Steve Burns tweeted, so again, not calling out Steve Burns, calling out the statistic, which I've heard for a decade or for decades. 90% of day traders lose money. So even a break-even day for you makes you in the top 10% of traders on that day. So I'm calling out this 90% stat because I really don't know where this comes from. I'll tell you a story. So back when I first started at Bright Trading, this is back, when Joel was the office manager in 1999. The girl I was dating at the time, my college girlfriend, her mom sat down with me after about 3 months after I started. I was about 3 months into Bright Trading. I hadn't been making money yet. I was still down. And she sat down with me and said, look, 90% of day traders lose money. She's like, you need to find a different career. That's what she's told me. And I was like, you know what? I'm going to try this out because I'm only 3 months in. It takes a while to learn. I do believe that the majority of traders lose money, especially in their first year of trading as they kind of learn the ropes. My P&L started the same way. Just lucky on the first week. Remember, I made money my first week just by BS luck, not really knowing what I'm doing. And my career before that, I came from retail. So trading retail stocks in university, then started at Bright Trading full-time right out of college in 1999 and or university in 1999 at the Detroit office under Joel Elconin. And the first
did you tell her who your mentor was first of all?
That's what I should have said. I got the best mentor in the world. This guy was on the floor in 87. He knows what's going on. And I did have a great mentor in Joel Elconin, obviously teaching me a lot of different things. And there were so many good traders in that office, in the Detroit office. But, the first 6 months, I lost money. I did. I lost money in the first 6 months. But I could see I was like getting more consistent. Like I was just basically just trading expenses that were getting me to a certain extent. And, that is, obviously something when you're trading actively, you're going to have more expenses. So that is one thing working against you as an active trader. And I do agree with that. But, the consistency started to come for me after a few months. And then after about 6 months, I got my account back to even. And then I never looked back. And I've been profitable every year since then. So 22 years of consecutive profitability. And that's day trading / overnight trading. Some day traders are specific day trading. I'm 24-hour trading, call it, where I'm going in and I'm usually out of everything on my day trading. And my Bright Trading account, I go close it out at 10 a.m. every single day. I go flat. So after the open, and then I take a few hours, and then I come back in the afternoon. We know I don't trade from about 10:30 till about 2:30. So about 4 hours in the middle of the afternoon. A lot of choppy hours in there. I think if you're trying to day trade in those hours, I would believe that maybe 90% of those scalping hours, those are really tough hours. It's very, very dominated by high-frequency traders. But just going back to the original stat, do 90% of day traders lose money? Where does that come from? Interesting enough, I posed that question on Twitter about an hour ago, and I did get a response of a paper from Macro Trader. Thank you for sending me that. And this was a paper that studied day traders. I'm just quickly looking at it. It's a paper from 20 years ago too. So it's a paper from a long time ago that was done, looks like by Brad Barber at the University of California. And they looked at Taiwan day traders. This was in May 2004. And basically, I didn't read the whole paper because I couldn't do that in 32 pages in the last half an hour, especially, because I'm still doing other things and prepping for a show. But it looks like they were, it's transaction costs that were really hurting performance. So they said the gross amount of the day traders there, which they did say in this, the majority of day traders lose money, and they had the number really high too. They had the number really high too, but they were saying transaction cost was really what was impairing the performance. So that makes sense too. One thing to consider is that transaction costs have dropped considerably since 2004. So, we have free trading at Robinhood. Now, we know free is not free. There's still spreads you have to pay. So there's still, some costs that are hidden. But when you look at, stats, you probably, if you're comparing it back to when these people were throwing out this 90% stat 25 years ago, costs have come down a lot. Even at Bright, remember we used to pay at Bright 1 cent a share.
I know.
Hey,
Dennis, can I ask you one question? Can I interrupt?
The
10 o'clock thing. Are you, and I really think this is important. Like, so if you you always shutting it down, you're not hoping that a loser comes back.
I eat it all.
Whatever.
I eat it all. Yeah, because I'm leaving my desk too. So
Okay.
I got the young kids. This is basically a thing that I've done since I've had the young kids. I got the 4-year-old and the 6-year-old. We know I trade the pre-market. I trade some of the after hours. I can't be trading 16, 18 hours a day. I got kids. So I really enjoy that time where I take 3-4 hours off in the middle of the day. And I go, obviously with COVID, it's been really easy because my kids aren't in school and Spencer's not in school. So, I do some schooling with them. It's family time for me, really. So that's what I've done for the last few years here, really since I've had kids. I've taken those hours off in the middle of the day to try to be more with my kids and to help them. So at 10 a.m., my Bright trading account, this isn't my long-term investing account, completely different. My long-term investing account, I've held Apple, and MasterCard, for a decade, like different stocks. Just talking my Bright trading day trading account, 24-hour trading. I enter positions on the close. I enter positions, and I'm entering and exit all the time. I do lots of in and out, in and out, in and out. But once I get just through the open, I'm trying to get out of a lot of my stuff on the open, but I sometimes get in some stuff on the open too. But after 9:45 to 10 o'clock, unless the market's really crazy, I shut, I basically get flat. I get flat on that account. Pretty much 95% of the days I'm getting flat at 10 o'clock. So yeah, then I can analyze, how was my performance over the last, the day, for the day, and I can, book in my profits and, look, and it's very consistent. I mean, my day trading has always been much more consistent than my long-term investing. Like I said, I always feel like I'm a really good day trader. Long-term investing, it's still, I kind of move with the market. Market gets hit, my long-term investment account goes down. Market's going up, my long-term investment account going up. Market's going down, up. My day trading performance is usually in the green. I'm green most days. So I think you can develop some consistency. So to just have this thought that 90% of day traders lose money, maybe it's right. Like maybe there is. Maybe it's how you define a day trader. But I challenge, I think that number's high. One, because when people were throwing that stats out, transaction costs were a lot higher. But, there is definitely, I think the majority of day traders will lose money because of, their personality traits. Discipline is the number one thing that keeps you in the game. If you're not willing to cut losers, like I said, eventually you're going to get hit pretty hard. So, I mean, you've got to be disciplined. There's a lot of different, there's a lot of different personality traits that are going to make you a successful trader or not a successful trader. But, there is this, persona that all day traders are just gamblers. I mean, Warren Buffett has said it in the past. And I actually think I'm a risk manager as a day trader. From my perspective, more as entering, thinking about how much money I can lose, I'm looking at risk management. So I'm the opposite of a gambler, in my opinion. But if you're outside and you're looking at this industry, you're thinking, oh yeah, they're just gambling. I think long-term investing is sometimes more of a gamble than my day trading. I mean, what are your thoughts, Joel? You've been on both sides of this. You're no longer like your bright trader, active day trader, but you still trade. But you were there. I mean, you were a floor trader. Were the majority of floor traders, the locals on the floor, losing money? Were 90% of the locals on the floor losing money? I doubt that high.
No, I mean, because there's different, there's order fillers, there's locals. I just think that and I think the one thing that you've done the best is adapt to the different markets and the different styles. And, that's the key. I think with one thing that I had a hard time with was, decimalization, just for my style of trading, and you have to adapt. But you're right, grinding it out during the day it's a tough job. You're competing with the computers, and what I find, for me personally, is when the market's closed, I can do my levels. I can put my orders in overnight. I can have risk reward, and because me looking at it is not going to do anything but influence, making decision out of it. So you mentioned personality, you mentioned adapting to the markets. I think that the stat that I think that's a deceiving stat, because over the last year, I mean, some people have had some good years.
It's probably in the last year. There's probably 90% of traders are making
money. Yeah,
probably because we've been in a bull market.
Yes.
So and a lot of day traders are long only traders. I think the majority of prop traders, I think the majority of prop traders probably go both ways. Meaning
you have to.
Long, short.
You have to.
Yeah, because if you're going to have longevity in this industry, you've got to be able to survive the bear market. So, and like I said, I know some great traders, and my best years again were 2001, 2008, and March of 2020. Those were my best. That was my best month in a decade. March of 2020. And you're like, how? And stocks are going straight down.
Inefficiencies.
One, I was biased coming in because I saw it coming. You could see it coming. But two, it's just the inefficiencies go up. The inefficiencies go up, meaning if you're a relationship-based trader, stocks are going, down $2, and then the paired up stock is not moving yet. Inefficiencies increase, and that's kind of what bright trading is. We're more looking at from a quantitative perspective. So and the great points in the chat too. I mean, it depends how you define a day trader. Are you talking about and then this study that I just cited from Taiwan, which I could put a link to. That study the Taiwan traders, they were looking at a person who does one round trip a day as a day trader. I mean, it's a different animal too. Like if you're just taking anybody who's just starting with a Robinhood account and saying, okay, well, yeah, they made a day trade that day, they're a day trader. So how do you define what a day trader is? Are we looking at professional day traders, meaning the ones that are sitting with prop firms where they've got training and they've got a lot of resources behind them? But it's interesting, I don't know really where that 90% stat originated. Steve Burns, thanks for bringing it up here again, because, like I said, this was said to me by my girlfriend's mom back in 1999. So, I mean, this is a stat that has been out there for decades, that 90% of day traders lose money. You're crazy to try to go into something like that. But there are a lot of successful day traders, and we've got some in our firm that they're successful and consistent every single year. So if you can get, I guess, to be in that top 10% or in that 10% that are making money, those traders are very, very consistent. I just challenge whether that 90% number is high,
another thing too, and I thought about this in our audience too. Like I don't know everybody, right? You get a feeling for the swinger, people that trade. But what about, there's a lot of people out there that maybe are older, maybe are retired. They're keeping a close eye on their portfolio. They do options every once in a while to hedge their position or something like that. It's just like you throw that classification in there. It's very hard to define. And then another thing that you talked about too, and we discussed, is the shorter time frame. Right? The more the competition. If you're expanding yourself out, even like to a day or a swing or, a week or two, you are eliminating the competition, because a lot of the computers shut down at night, right? They're not stepping in front of your bid and offers. So a lot of different descriptions you could use for that. But what we try and stress is risk reward, identifying relationships in the markets, and just keeping a head on a swivel and looking for different things to analyze and to trade. And it's a tough game out there, but if you are disciplined and you are able to adapt to different markets, look at relationships, listen to the pre-market prep show every day.
We're trying to teach day traders, like our focus is probably to the day trader on this show. We're always talking different trading ideas for the day, setups. We try to do a little bit of long-term investing. We try to put different hats on, but our focus is to that active trader, that trader that's trying to look for an edge, and we're trying to look for setups. We're trying to look for different, edges. We're trying to look for, the market overall, because, we can really, and market timing is very difficult. But, we try to get a feel and give our thoughts and opinions. So, we're trying to educate traders here too. So I do think you can be a successful day trader. So I'm just saying, if you're a newbie, you can think about the 90% stat, and if it's not working out for you, maybe you're just part of the 90%. I just don't know if that 90% stat is true, for one thing. And then I just don't want to discourage, because there's a lot of probably people out there who could be very successful day traders. So I think, it's made my life. Day trading has made my life. That's why I take probably personal offense to it. All of my wealth, basically all of it, has come from day trading. Yes, I do long-term investing, so it's helped to build it along with it. But all of my, my income, 100% of my income on a yearly basis comes from day trading. So, and like just 24-hour trading in and out. Like I said, I've adjusted. I do some overnight trading, which I didn't do years ago. I didn't do any. I always closed everything at 4 o'clock before 2010. But you've got to adjust, and you find different edges and stuff. And I found like I had a lot of edges overnight, probably from those stats where you can see there's more market movement overnight. So volatility, where the VIX starts to go low in those years like 2012, 2013. I'm trying to find more volatility by going after hours, because, you know, when the volatility goes down, that's when my P&L goes down. So to keep my P&L up, I've adjusted my trading hours. Obviously, pre-market after hours is a tough animal, so I don't suggest any new trader to try those hours. But it's all about making adjustments, and that's what will make you successful as a longer-term trader.
All right. Is Spencer still with us?
What? Did someone say something?
You slept through that one too? He's still trying to recover from this Nashville trip where he partied like he was 19 years old again. Yes. Every minute he gets, he's like, oh, this is an opportunity for me to have a 5-minute siesta here.
Exactly right. Exactly right.
All right. Take it away, Spencer.
No, but actually to the last point Dennis made is the point that I made when we talked about this before was I think, I don't know, but I think that stat probably just refers to anybody that's ever attempted to be a day trader, anybody that's ever tried for a few weeks or a few months to make short-term, and by short-term I mean intraday or short-term swing trades, and that 90% number encompasses everyone that tried that, and most of them fail, and we know this. So that was my thought. It's not referring to like professional traders was my assumption from that stat. Let's talk about GameStop here. The meme stocks had a good day yesterday, and then I didn't see this headline until late after I'd already gotten home.
Yeah.
But this GameStop NFT thing, and I'll bring up the site.
Yeah, bring it up.
I mean, apparently it's real. Benzinga reached out to GameStop, didn't hear back. It was after hours, so not a real surprise.
Do we have confirmation that it's real, or is this just?
I mean,
not that it's real. The site is obviously real. Did GameStop put this site up? Like it's on their look. It appears to be on their website, nft.gamestop.com.
Don't you think
have you guys tried to call GameStop? Did they respond?
Right. No, like I said,
they haven't responded.
It was late.
But don't you think if it wasn't true that they would come out and say it?
I don't even know if they know it's there. Like that's why you got to contact. Like it hasn't hit major media. Not splashing all over CNBC. No. So you know this is like in the social media in the Reddit world, and obviously in on Twitter. And I don't know, Discord or all these other social media platforms there where they talk stocks. They're talking about this, and the stock's up 16 points because of it, I believe. But the question is, did GameStop actually put up this site? Because look at this, the site looks very cheesy.
So it
doesn't look like a professional site.
There is a guy, and I wish I could scroll up and remember who mentioned it in the chat. If I see you, I'll give you a tip of the hat. But there is someone in the chat who mentioned that there is someone on Twitter who is claiming to be the head of blockchain at GameStop, and I'll bring up his profile here, Matt Feinstein. So, I mean, from that sense here, I don't like to take any of my confirmations from Twitter, and I know Benzinga is very careful too. I know. I'd like to just give GameStop. We're gonna have Benzinga. I'm gonna have Benzinga call GameStop today and just get confirmation. And in all likelihood, maybe they did. Maybe they did. We did call, but again, it was like
they haven't responded. It
was after hours.
So we need to get a response. So we want to get a response to, if this, is indeed their website and they put this up. That's what we want to know. So that and maybe it is. Maybe it is. Like you hope it is. I hope it hasn't come to a point where people, there's somebody putting up fake websites. So I hope it's real. I hope GameStop did put this up because I don't want to think that the markets, are getting to a point like that where this crap happens. But we have seen this happen before. It does seem a little bit weird that they would just be like, "Hey, if you want to join our team, email us like nft@gamestop.com." It just looks cheesy. It doesn't even look like professionally done. It does look like GameStop is still a $1 billion corporation. Usually these corps are putting up stuff that doesn't look kind of cheesy like this. It looks cheesy to me. If GameStop did put this up, it's actually a disappointing website, like in my opinion. It's disappointing, because obviously, the stock's going up and we want reasons to, for the stock to, be up at $225 and be worth, the market cap that it is. But it doesn't seem like, it just doesn't look like that professional of a site. So that's why I challenged right away. I'm like, was this put up by GameStop? So it's nft.gamestop. It appears to be on their server. Yeah. So I don't know. Can you get I don't even know if you can get a domain where you can put a dot in front of somebody else's, NFT.GameStop. I'm not sure the answer to that.
You can do that. Yeah,
I tried to do it on GoDaddy just to try it myself, and I couldn't do it. So maybe this is GameStop's, but I would love for GameStop to just have a confirmation to Benzinga. Yes, we put this up. This is our site, and then that's okay. Cool. Wait, so that's what we want to get that confirmation. We have not got that confirmation.
Stop. Wait, what did I just click on? I just clicked on. There was a little dot. Thanks for telling me that. The Joseph, the white pixel in the corner.
Yeah.
All right. Wait. I don't know what's happening. Let's go with this. All right.
Okay, we're watching this live.
I just
press tab space to start. Do it.
Oh wait. Is this a game? Oh come on. Oh my gosh.
That's fun.
I'm playing the game.
That's fun. It's a little cat jumping over rocks.
I don't know what's happening right now.
Anyways,
is this it?
It's a cat in space jumping over rocks. Are you jumping?
Yes, that's me.
You're pretty good at this.
No, I'm not.
Oh, you died on that rock, Spencer. Come on.
How do you guys do that?
All right. Enough of that.
Anyways, we're gonna try to get confirmation for you today. Watch your Benzinga Pro. We'll get you confirmation, yes or no.
229 pre-market high. That's all I have to say. Highest it's been in a long time. What's this high? I'll just give you guys some levels, even though they don't matter. 231.47, March 17th.
This is wide open. It's over 200. I got quoted in Reuters, and I said, I got a call from a Reuters reporter asking me about this, and I'm like, it gets over $200. It gets the buzz going. I mean, where the social media is talking about GameStop's back. It's over $200. So, I mean, it's being driven by social media. And maybe this site is going to be another driver for that as well, but they're talking about the site all over social media. So that's the driver. The driver here is social media. It's been the driver forever. I mean, it wasn't going down. It hasn't been going down. I was actually looking at this about a week ago and saying the stock just doesn't go down. So it doesn't go down. Maybe it wants to go higher. So the stock can go anywhere. When stocks are disconnected from their fundamentals, price can go anywhere. So I would not want to be short this right now. I don't have the guts to be long it either, but it can go anywhere. So wide open.
Oh, it's up 25% in 24 hours. So
wide open. AMC, same story. Stock disconnected from fundamentals. So we got the Reddit trade going on again. We got these stocks. AMC's had a big 2 days, big 2-day move from 12 to 16 to 17. It's wide open as well. I believe somebody said, I don't know if this is true or not, but with the dilution that AMC is actually trading at an all-time market capitalization high. So I'm not sure if that is true. I just read that somewhere because there's obviously been some dilution. So the stock doesn't have to get back. The price doesn't have to get back to all-time highs for the company's value to be at an all-time high. But I heard that as well, which seems insane in this declining, where movie theaters aren't probably as popular as they were 10 years ago. That's the market environment we're in. We're also seeing costs, KOSS, getting some life yesterday. We know these three were always kind of moving together. Another one was Express, EXPR. I'm just giving you the old Reddit names that kind of were all trading together. There was about a dozen of them that all started moving together. Bed Bath & Beyond, we're not seeing a lift in that, but we saw that one back in January. So you keep an eye on these, and you just, obviously just be aware. I don't know if the short interest has come down, but these were the stocks that were the Reddit stocks that they were squeezing back in January.
Muriel Siebert's not participating.
Thanks for that. And just with regards to AMC in particular, that there's going to be a point in the next, 6 months when that backlog of movies that got put on hold, they're going to all go into the theater at the exact same time, and then people are going to flock to see. There's going to be this rush to go to see all the movies that we could have seen last year, but we didn't. Like James Bond and whatever, right? Whatever Marvel has cooking, I don't know. There's gonna be a log jam of movies at the same time, and there's gonna be like a crush of movies, and people are gonna go and see them. It's gonna be in the news, oh my god, people are flocking to the movies.
Yeah, that's a good point there.
But that'll probably be a short-term thing, is what I'm saying.
So. In any regard here, the company market capitalization on AMC. Let's just go take a look where it is.
And I'll just give you the my focus number is 17.25 because that was the second highest high that it had during the craziness. You snuck over 18 in the pre-market, 18.08. You're still up there. So as always, look for some confirmation. Looks to follow through that pre-market high of 1808. Dennis, you did mention the market cap, the dilution. It's
worth $6 billion at this point. I'm not sure what it was back in 2015-16 when the stock was $35. So again, if you're new to investing, day trading, or trading in general, when you're looking at companies from a fundamental basis, I like to look at what is the company worth. You're looking at market cap, which is the number of outstanding shares times the current price. If you double the amount of outstanding shares, then obviously, the price only has to go up halfway to what it was for the company to its value to be at an all-time high. So somebody was saying that's already the case with AMC. Again, I don't know how much dilution there's been. I haven't crunched the numbers. So, but just be aware that, it's same thing with, like we were saying with the cruise lines. There was a lot of dilution there. So some of these cruise lines are actually trading at all-time market cap highs, despite, the stock still being significantly off of their highs. So something to be aware of. The best example is Citigroup. I mean, you can look at Citigroup and saying, well, yeah, that stock's, maybe at an all-time market capitalization high. But the stock's all-time high was $500 because there was a lot less shares. They diluted the hell out of it to survive back during the financial crisis back in 2007. So, you look at Citigroup at $77 and say, what an investment that has been. Not so fast. If you've invested back in, 2000, 2001, 2002, Citigroup stock was $500 back then. So it still has never got back and may never because of the dilution. AIG may be the best example. AIG all-time high, $1,700 a share. It's now 50. So that's what dilution does to you in the long run. It doesn't allow the price to go back up because you've added so many more shares. The government added a lot of those shares where it just simply can't get back up to those prices because at those prices, AIG would be the most valuable company in the world, which doesn't make any sense at all.
By far.
So
let's talk chips if we can for a second. We've got NVIDIA reporting tonight, but in the meantime, we had ZScaler out last night, and their report was quite good. Earnings per share of 15 cents versus a 7-cent estimate. Sales of 176 million versus 163 million. They also raised their guidance for the year while they were at it. They raised their EPS guidance from about 40 cents to 47 cents per share. And they raised their sales guidance for the year from around $635 million to around $665 million for the year. Q4 guidance was strong as well.
Big pop. Tech is back in favor. We've talked about this for the last week and a half. So you're seeing some of these tech pops hold. The turn was really on Take-Two earnings as well, which it kind of disappointed, but then they started buying them because it's sentiment towards the sector and people want to be back in tech stocks. So they're buying them up. It's holding up quite well. I will say Zscaler, huge double top at $200. So that's major resistance for you. I did not see where it traded after hours.
It traded up to 191.72, and
that's right where it is right now.
Yeah, right now. Boy, oh boy, it looks like someone's just saying, "Hey, I'll sell stock right now between 91.5 and 92." Now they're nibbling at the 92s. I think just let this one float up, see what the pre-market high is. If you want to hold out for I'd see a high at 91.48. If you're looking for more, 96.29 is the next daily high on that. It could stop anywhere in between, but there's a seller, there's a buyer, and they're exchanging at 192. A little rich for my blood to be getting long here, but see where that pre-market high is.
Probably some sympathy plays here this morning. I had a few, but I didn't write them down.
There's a lot in that sector, so yeah. It's like, where do you want to go? I mean, and you've got a lot of tech stocks trading higher here this morning. Big tech, not as much, but some of the smaller ones. And then you can go. We got the chips tonight, right? NVIDIA.
Oh yeah,
it's going to report tonight. It's got the split on the table. It's up $4 here. You got Snowflake going to report. It's trading up a couple bucks, and you got like stocks like Okta. OKTAs trading up $2 ahead of the report.
Why did NVIDIA not wait to announce the split when it was so close to earnings?
I don't know. They didn't want to throw traders like me that are putting on the straddle under the bus.
Okay.
from the Apple, remember? When I put the straddle and then Apple announced a 7-for-1 stock split on earnings day, and I was like, I'm dead.
Yeah. No, it's just, NVIDIA. The good news, bad news kind of thing. I don't know. We'll see what happens with the report.
We just had an uptick on MGM, nothing major, but the headline just came through that Amazon's going to buy MGM Studios for $8.4 billion. So that looks like it's going through. We didn't get around to that yesterday, but I don't know if you want to look at Amazon here. There was also that
drop in the bucket for them, so yeah. I don't think much is going to happen there. I still have Amazon in the long-term portfolio. Consolidation Station, which we know we like to strike in Consolidation Station. I'm not sure which way this resolves itself. Above 3,300, you start thinking, okay, maybe the bulls got a case. But Amazon's just been a fade for the last 6 months. It's really gone nowhere. We'd like, look out. You've been between really for a year now. We've been between 3,000 and 3,500. Just shopping around, digesting the big move we had out of COVID, which was a huge move. It's not a cheap stock by any means, but I still think Amazon is still, if not one of the best company in the world.
Ended up green on the day, even with that news. So I don't know, between that and the Apple Epic battle, which is going to drag on for months. I mean, just more headache, not to worry about. But the street shrugged it off. It was end of the day green yesterday. That little dip that we had around 11:30, that's when the news came out. That's when Amazon made the low for the day, and that's when the SPOOs made their low for the day too. S&P's knocking up against 4,200 here, still up 14 1/4.
Somebody asked what's going on with UVXY. There's a 1-for-10 split today, so that is nothing to see there.
That's how they keep the price up, because the thing just continues to be one of the most toxic investment vehicles out there. And what I mean by that is, if you're buying this thing, it just goes down. Yep. You get these little spikes during periods of market uncertainty, and then it just keeps continuing to go down. It is the terrible, worst long-term investment you can ever make if you're buying UVXY as a trading vehicle only. Don't put this in your long-term investment account. You're almost guaranteed. Nothing is a guarantee in life, but UVXY is a close to thing. If you are long UVXY in your long-term investment account for over a couple of years, you are highly, highly likely. 90% numbers is probably higher than 90% numbers to lose money. Don't stick UVXY in your long-term portfolio. You lose money.
All right. Well, I'm working on getting Chuck Self on. He's in the background, but we're having some camera problems. But he's here. We're working on that in the background while I keep working on that. Let's go to
Dick's.
Yeah. Okay. Let's go to retail. We're just from this morning. Dick's out earnings. Q1 adjusted EPS $3.79 per share versus a $1.
Holy cow.
I think that these estimates are just off because it's impossible to estimate.
These companies are just killing.
It's impossible to estimate. Okay, the sales is more comparable. That's a more reasonable number. Sales $2.92 billion versus $2.18 billion. So they beat that number. Fiscal year EPS guidance, they guided in the $8 range. For their earnings per share, they guided in the mid to high $10 billion range for sales for the year. They also plan to buy back $200 million of common stock this year. And that's what I got.
You almost always, it seems like all these stocks, anything to do with outdoor activities, just continues to blow it away. The reaction to the stock is not always positive. It just depends. This is such a blow away. There was nowhere for this to go, but probably higher. I mean, $3.79 in a quarter. So, I mean, all of these companies are just kicking ass and taking names, the companies themselves. The stock needs to get up, make a new all-time high. It needs to hold on to these gains today. I'm not going to try to – this could go either way. It's coin flip territory because the numbers are so good. Maybe they're just going to continue to drive the price higher, value traders. But remember, I still believe, for a lot of these companies that this is like the peak cycle right now. We were right. COVID environments, people are doing outdoor activities more so than they ever have in the past. If we're coming out of COVID, I would expect, a year from now that Dick's probably isn't going to be putting up these crazy numbers, but great for them. Great performance by the company. I'm not going to try to guess on where the stock's going.
I'm not going to guess either. I'm just going to tell you what the pre-market high is. The pre-market high is 91.42. You only have one number. That's 91.80, right? And that's the all-time high. So if you're looking for a little bit more, get through that pre-market high. Just would be, if your target is above 91.80, make sure it gets over 91.80 first. And also don't fall for like you take out 91.80, you go to 92.02, and then you come back down through that 91.80. So a couple tricks of the trade. All-time closing high is 89.66. Looks like we have a chance to best that today.
We've got Chuck Self here, not going to be joining us via video, but we have audio, and that's all that we really need. Chuck Self is the CIO and COO of iSectors. Mr. Self, good morning. Can you hear me?
Yes. How are you guys doing?
Excellent. We got you on audio, and that's just as well.
Yeah, sorry about that.
That's okay. How are you doing in these markets, man?
Oh, these are really wild markets. As you know, we play in all the different markets, even beyond stocks. And our long bond position has started to do well. And then we've been also long commodities in some of our strategies. And I'd love to talk to you about commodities today.
What kinds of commodities we're talking about here?
Well,
metals. What's up?
Yes, is the answer. And what your listeners are going to be interested in is that you can stay in the stock market and still participate in commodities. As you know, commodities have been in a 6-month outperformance of stocks themselves. And we think this is the beginning of a longer-term move where commodities will finally outperform stocks. As you well know, over the past at least 10 years, commodities have underperformed stocks. And so there's going to be both trading opportunities for the traders and great diversification opportunity.
So let's start with the short-term opportunities. Where are your eyes at for short-term stuff?
Yeah, well, we have a lot of different ways that we play it. You can play it both broad, and you can play it in specific commodities. On the specific side, we love the precious metals, especially in the short term, and you can play it as far as owning a stock by owning ETFs, and so you could play.
Right.
We use PSLV, which is the Sprott physical silver shares. It's a little bit special because it's a closed-end mutual fund, actually, not an ETF, and it's based in Canada. Now that's, and I'll get back to why that's important. But anyway, as far as knowing what it does, it actually owns the silver that backs up the closed-end trust at the Royal Canadian Mint. Now, the Royal Canadian Mint is going to be there no matter what. We don't have to worry about that silver going away. But it actually, every share has physically backed silver. You can go on their website and you can see the numbers of the bars if you really want to, get into that. And they have auditors that come in and audit a few times a year to make sure that's the case. Now there are U.S. ETF silver ETFs, SIVR, the Aberdeen Standard Physical Silver Shares is one of them. But you want to own, if you're in a taxable account, you want to own the Sprott. And the technicality is that in the U.S., any fund that is backed by futures is taxed as a collectible. It's not taxed as a security as far as the capital gains are concerned. So when you take capital gains, you pay 28% taxes on it. Whereas if it was security, you pay 15 to 20% depending on your tax bracket. Well, it's Sprott being in Canada is considered a security under U.S. tax laws, and you get a better capital gain exposure. And market-wise, they both act the same, but you get this better taxable situation. Now, if you're in a tax-exempt account, then it doesn't matter. You can own the U.S. And SIVR. Now, PSLV, the Sprott, is a little more expensive, but they act pretty much the same. The second one we really like now, and I've been talking about for a while, is oil. We think that crude oil is on its way for another continued short-term gain, and the most efficient way to play that in the ETF market is OILK. That's the ProShares crude oil strategy.
Why is this the most efficient way to play oil?
Because it's most efficient for the investors, again, if they're taxable, because most oil ETFs are taxed as partnerships. So if that happens, then at the end of the year, you get a K1, and your tax advisor has to file the holding as a partnership, and that just rings up the cash register for the tax preparer. This fund is, again, just ends up acting like a regular fund. You get a 1099, a 1499, and you don't have to do anything with partnership accounting as far as tax is concerned. And so it doesn't matter if you're in a tax-free account.
Hey, Chuck, can I hop in here with a couple questions?
Sure. I just wanted before you. That's very interesting with the K1 free. I've never seen, even it says ProShares K1 free crude oil strategy. So.
Yeah, that's right. So. Yeah, and it's the best way for taxable accounts to play the oil market.
Yeah, like I said, at Bright Trading, we get K1 partnership income, so 100% of what I've is taxed. So there is different taxing brackets depending on where you are, who you are, and obviously your own taxing situation. But K1 income is taxed different than a 1099.
And it's complicated.
It's
complicated, and so most people don't want to pay their tax attorney or whatever more money. So
yeah, to file K1.
Right. So.
Let me ask you about the oil here.
Yeah.
What about the whole going green? How about electric cars? I mean,
yeah. That's 10 plus years away.
Wait. Chuck, tell me how you really feel.
What do you mean? What do you mean? They're out there right now.
No, they're out there, but the adoption of it broadly in the economy is a 10-year plus rate. Now, I'm a tree hugger. I'm an environmentalist. So I'm telling you, not from my heart. I'm telling you from my head what's going to happen. The battery technology, as we have found out by following Tesla and some of these other people, have been much slower to develop than people had expected. And I read an article about someone that said 5 years ago that by 2020, 2021, half the cars would be electric. Well, they certainly aren't electric, because you outside of a BMW, you can't even go 400 miles on a charge yet. And so it's unfortunately it's going to be much slower than people expect, and that the market expect. And as more and more people realize this, and as the economy recovers globally, oil is going to be in great demand. And so we are bullish on both energy stocks, and also oil in particular.
All right, let me throw another thing at you here. A lot of people are talking about the reason you have the rise in commodities is because obviously the supply chains were shut down. And then you get the economy going again. People are building houses and buildings and everything. So now the lumber, maybe they could harvest the lumber, but they couldn't process it. And transitory, that word that we heard.
I know.
Yeah. What if what in 2 or 3 months? I mean, lack of supply, right? Increasing demand. Maybe these things are just overvalued in the short term. I mean, that's what Pump and Powell thinks. He thinks this is transitory. So what about this? It's just about the supply chains being behind.
And of course, different views is what makes a market. But we could be wrong on this. We've gone back and looked at research, even academic research, on these demand pull inflations. There's 2 types of inflations. There's cost push inflation and demand pull inflation. Those of us, and I know a few of us on this call, are old enough to remember the 70s and the Arab oil embargo, when all of a sudden supply was taken away from us, and that was a cost push inflation. The price of energy went through everything in the economy. This is a demand pull inflation, in that because of the demand, and maybe some of it's transitory, but we feel that this is a longer term situation. The demand pull inflation is what's causing that. The studies show that when commodities start outperforming in a demand pull inflation, outperforms equities for 3 to 5 years, and we're only 6 months into this. So we think the past.
Give me a good inflation hedge. Well, I mean, I have some commodity. I have some commodity funds. I got gold. I got silver. What? Give me
here's another interesting one. Here's something interesting. There's another ETF called the IQ Global Resource ETF, GRES. And for those that are a little, think that commodities themselves may be a little scary, this is a really interesting fund. Because what they do is they take equities that are linked to commodities, and they use momentum and valuation factors to determine what they're going to own in that portfolio. But then on top of it, they give you a short exposure to global equities. So as you in any stock, there's especially a commodity stock, there's the underlying business, and then there's what's going on broadly in the equity market. Well, this fund, in essence, hedges away what's happening in the broad global market, and you just get, in essence, pure exposure to what's going on in the commodities underneath.
Does it pay a dividend at all? Do you know?
I have to admit, I don't know that.
Right.
It looks like it does. It actually has.
Well, it should because it's equities. But it's interesting to look at the top 3 holdings. The top 3 holdings are China Xinyu Energy. This is a global fund. Ecolab and Newmont. Okay, you get Newmont and you get China Xinyu Energy, but according to their research, Ecolab, which is based down the street from me in Oshkosh, Wisconsin, Neenah, Wisconsin, has a commodities aspect to it. So it's the IQ people, which is New York Life, have done a tremendous amount of research on this, and it's been one of our best commodity holdings over time. And so then they put a 10% short on the S&P 500 index and 10% short on the MSCI EAFE index, the Developed Market International Index, and that does the deal for them.
I'm loving this. Whether or not you agree with any of Chuck's takes is almost besides the point, because like as I have said, I love ETFs, right? And I love them because there's so many of them out there that do so many interesting things. And so the 3 that we just discussed, right? GRES, put this up on the screen. OLIK and what was the first one, Chuck? I'm sorry.
PSLV.
PSLV.
Or SIVR.
Thank you. These do somewhat complicated things, but they're good for some people. They're tax efficient in some way, shape, or form, or they do some sort of complex strategy, and they exist for a reason because they're appropriate for some people. So check them out if you think they're appropriate for you. They're not for everyone, but I always like learning about these more obscure ETFs, right? Because they are obscure, but they work for some people, and they're in the marketplace for a reason in the first place. So Chuck Self is the CIO of iSectors. I've enjoyed talking to Chuck today. I hope Dennis and Joel have too. Chuck, we will catch you later. We'll stay in touch, and we'll keep tabs on your commodity.
Get you back down again soon, Chuck. Always great.
Yeah.
Unique content. Get that camera working so we can see that.
I know. And by the way, out my backyard here, a deer just went by. So you got to love northern Wisconsin.
Nice.
Well, yeah. All right. I guess that's south for you, Dennis, but north for the rest of us. Thanks a lot. Thanks a lot, Chuck.
See you, Chuck.
All right, let's do a couple minutes of ticker time if we can. If you have any questions, drop them in the chat. John Lopez says, I like ETFs because I'm a lazy trader. I'm not even really that much of a trader. I just like ETFs, man. Let's do some ticker times. And at 9 o'clock, I'm going to bring on one of my colleagues, Elliot Lane, to talk about our upcoming Cannabis Capital Conference. So, okay, ticker's flying now. QS, which is not one we looked at.
I haven't looked at it for a while.
Right.
Wow. Why not rallying? We've seen a lot of the growth names, a lot of those, high, pre-revenue names starting to catch a bid. This one has not. I guess maybe Ride, not helping it here either. But that's concerning that it's just not catching a bid. The stock should be rallying in the last week and a half, and it's going the other way. So relative strength is very, very, very poor, which scares me. But oversold. It is oversold. I wouldn't be shorting it here.
Spencer, you want to release the charts here?
What do you mean?
Are my charts up?
Yeah, I see the charts.
Oh, I'm sorry. I'm just looking at it. Look at this string of lower highs here. Wait for that to be broken. You probably, if you want to draw a little trend line there, but how many lower highs have you had? I think 1, 2, 3, 4, 5, 6, 7. So eventually it's going to break that. Where it's going to go, I don't know. I just would, if it starts to rally, just make sure it gets through each of these lower daily highs. Not much to analyze there.
All right. Was it James Santangelo? I think it was, that noted the tattooed chef's been on a run. Do you take your money and run if you've made a profit in this thing?
TTCF.
Yeah. Go ahead, Dennis. I'll let you go first.
Yeah, probably. It's had a nice run. Again, we've been talking about the move into the growth names, and SPAC. This was a SPAC, I believe, too. We've just seen, like I would have thought QuantumScape would have looked like this when I got looked at the chart for a while, and it doesn't, which is concerning. It's had a nice run. You got major resistance it's bumping its head up against. I mean, really, the stock, if you're coming in and buying it now, I think you're late to the party. But with that being said, it was higher than this. We're still off the highs a bit. So if I was trying to get in now, I'd wait for a pullback. If I was long it, yeah, I would take the profits. But that's just me. I always sell too soon. So,
I mean, if you really, my main focus would be is, can this thing get up to the double top at 2250? That would be my next target.
That's where it got yesterday.
Yeah, I got to 2219, and I don't, it backed off that, but. See what happens. See if you can get there. I think a good thing to keep an eye on would be just not taking out. If you want to try and exit on weakness instead of strength, let's just move it up. Yesterday's high or yesterday's low, 2051. Then you fall down to a double bottom at 1980. So move the stop up. If it got to 2250 today, I'd be pretty tempted to ring the register.
What about CERN, which we haven't talked about? I don't know ever. Maybe we've talked about
it. Hey, we just dropped. What's going on?
We just dropped. Oh, we dropped a little bit.
What is going on? We are moving down.
Come on, Dennis.
I don't know.
All right.
News me.
That's why I have the Benzinga Pro.
Come on, news me. Finally. There's something's going on the show. No, there's something's going on. Do we have a number? No, it's just before 9 o'clock. Help me, guys.
I'm not seeing
nothing. Nothing. Just another Joel overreaction. Okay.
I'm really not seeing anything out there. Unless you see something, Dennis, but I don't. CERN, though. Let's talk about it.
Okay.
Cerner?
Dennis, go ahead. I'm going to pull up my chart.
I don't know.
No, Dennis, cancel bids. Cancel bids.
I know. I'm getting distracted by the market, too. We're in consolidation station here last few days. I don't know. It was a wild day for yesterday. I kind of had an outside range where you got a lower high and a higher high.
Yeah.
So it's a wild candle for it yesterday. Let's see. $80 is the major resistance point. Let's see what it can do there.
Yeah, I don't see what it's doing in the pre-market, but that's a big bar. I mean, this major seller just over 79. So if you see 79 today, just be aware. Got over it the last 3 sessions and kind of came off hard, almost matching lows on the downside here, right at 77. So keep it green, breaking 77. You got a little bit of, actually, there's 3 out of 5 lows there in the same area. Big seller at 79, kind of in the middle of the nowhere at 78.
Do we think the headline out of China is enough to move it, the market like that? That they're going to limit some corn imports and cancel several U.S. cargoes?
I don't know. We only moved down about 3-4 points, so it wasn't that significant. But I am seeing some stuff roll over. I'm trying to look at imbalances to see if anything was moving there. So we're leaking. We've been leaking all morning slightly. Like we're look at the overnight chart here, Joel. Let's just bring up the futures to get a feel for where we've been overnight, because it's a good exercise. A lot of times, traders are just wondering where we're going to go, what we've done. Well, what have we done overnight? It's always a good exercise to look, because where we were, sometimes it's hard to get back up to those levels. So if we look at where we were last night here, Joel's bringing it up there for you. How high were we?
We're 10 points off the high.
10 points off the highs.
Yeah. You know what's really aggravating is the CME has changed their close now in the S&Ps to the mid-range or the VWAP of the last minute of the day. So like you never like if I was trying to buy the close last night. I never even saw the close of 85.5. So that's on the downside. No red until we get through 85.5 and 04.25. Really nothing up there. The all-time high is up there at 03.5. Couple quiet days heading into end of the month. Also 3-day weekends. So we're hanging up here. We're not pulling back. We're not. We haven't said, hey, this is the top of the trading range yet. Still trying to bust through to new all-time highs.
All right. On that note, I'm going to
GameStop up $22 now.
Really?
So again, yeah, it's running up another $10. So again, we don't have confirmation yet, but we're just going to try to find out for you guys today if GameStop did indeed launch that site.
230, 235 it got to.
Yeah.
Holy moly.
We're in the full little squeeze of all these names. AMC's up another $1.30.
So
we're in 17.72.
So like what's the reference point to the extent that one exists? Like three, what was the high from before? That second spike was 348 he got to. So like I don't know.
Yeah, does it start to put that on the Joel Elconin sale? Does it start to Joel sold the top on this thing? Does that come back into play? I mean, it could. It's stock can again go anywhere. If you're trading this on fundamentals, you are doing it wrong. This kind of stuff just does not trade well on fundamentals.
All right, Spencer. I know you got Elliot coming on. I'm gonna stick around here, folks, for a few minutes. So I missed some symbols. I'm gonna start with Facebook. It takes me a little time to type, but
all right,
go ahead, take it away, Spencer.
All right, we don't do enough, I think, of talking about our events before they happen at Benzinga. So I want to bring on Elliot Lane here, who is on our events team, because we've got one of our primo events coming up here. The Cannabis Capital Conference is June 3rd and 4th. Is that right, Mr.
That is right, man. And thanks for giving me some time. I'm not usually on this early.
I know, man. You gotta play fast and loose here with us. Okay. The reason I reached out to you is because you had messaged me and said that we had the slate for the conference had just gotten a lot stronger.
Yeah.
Right? So tell us here. Let's do this. Tell us who exactly is attending. What companies, are attending this conference, and we'll be presenting.
So a lot of stocks you all have heard of. Some you haven't. We'll start with Spencer's favorites. We do have advisor shares joining us. If you want to invest in the industry as a whole, we'll have MSOS and YOLO, MSOs. So two very strong ETFs through advisor shares. We're going to have Canopy Growth there. They speak at all of our events. If you don't know them, CGC, they are one of the global leaders. Love them or hate them, they still are a global leader. Made a huge acquisition recently with Supreme Cannabis and Canopy. In Canada. So hopefully they'll talk about that. TrueLeave, TCNNF. And that's a huge one. Big medical cannabis company just made a huge multi-billion-dollar acquisition to expand their footprint into the West Coast. A lot of consolidation talk at this event with TrueLeave, Canopy, with Flora Growth, a new NASDAQ, FLGC. If you don't want to invest in OTC stocks, we will have plenty of NASDAQ stocks like Grow Generation, like Urban Grow, Flora Growth, as I mentioned. Those ETFs, Agrify, AGFY. It's the who's who of cannabis. So if you want to invest in cannabis or put any type of dollars into that market just to see how it grows, they're going to be at this event. And I guess one more stock that I forgot to announce, I'm super excited about. IIPR will be joining us to discuss sale leasebacks and REITs and how those are affecting the market right now.
So what's the situation here? It's free to attend, but not for everyone. Is that right?
It's going to be right here on YouTube. So we have a couple levels of streaming. So if you are an accredited or institutional investor, you can come and network with these C-suites, but you can watch it right here next Thursday and Friday on our YouTube channel. It'll be 2 tracks each day.
Bill Big D asked where the conference is. Bill Big D, the conference is in your house, man. It's virtual. Virtual. But Elliot, while we're on the subject, Do we have any timeline on real in-person events or no?
Yeah, I think honestly we're probably looking at like a September, October timeframe. It's not official. I'm not making an announcement there. But we'll say ideally this is our last fully virtual cannabis event.
I just put you on the spot there.
No, it's fine.
Yeah. Okay. So it's free to attend. It'll be on YouTube. The link is up on the screen, bzcannabis.com. But you can passively watch it and engage in the chat on YouTube, but you can also get like one-on-one time. Is that right?
No. Well, if you're institutional and accredited.
If you're accredited.
But I will say, I'll be emceeing a couple tracks here. My brother Patrick will be emceeing. We pass along your questions quite often. If they leave time for questions, we do pass them along. So Solar Up, I see you're there, man. He's a good conference attendee for us. Driven by STEM, if that's the same STEM he's talking about, maybe not. They could be there as well. So
again, names that you all know, right? Canopy Growth, True Leave, which I've talked about a number of times. I own that. IIPR, it's what Elliot just said. These are big names in the space. We only do like 3 cannabis events a year. Is that right?
Yeah, this is our OG investment conference, y'all. We've been doing the FinTech Awards forever, and we've been doing this for almost 3 years, and we're really good at it. So you come out, or actually you don't have to come out anywhere. You can walk to your office and turn on the computer.
Exactly. And the in-person cannabis events are obviously the most fun for obvious reasons, but we won't go there. Okay. Benzinga or bzcannabis.com to learn more about the upcoming Benzinga Cannabis Capital Conference. Again, June 3rd and 4th, right here on Benzinga's YouTube. Elliot, thanks for hopping on for a few minutes, man. And whenever you get new names, let me know so I can let the people know.
Done. I'll pass a list on to you and we'll keep you updated. Thanks for having me on, y'all.
Thanks a lot, man. All right. It is 9:07. So I've been mentioning on the last couple of weeks that we are looking to do more, a more variety of stuff at the open. We've been doing David Green, but David Green can't do every day, and he's not doing this week. So what we've got going on today is we've got Robert Roy, who, if you watch our show on Friday afternoons, he's our options, or one of our options guys. He does a really, really good stream about just like options education and like outlining his strategy. It's very simple to understand. He takes a lot of questions from the chat. It's very engaging. He's going to be live at the open, not doing live trading per se, but like walking through setups per day. And again, he's an options guy, so he's not going to be talking straight stocks and buy or sell this or that. He's not going to be doing that. He's going to be coming at it from an options point of view. But that'll be the next stream coming up right now. Producer AB, do you have any insights? Good morning, by the way. Do you have any insights into what Robert Roy's going to talk about, or not really?
Good morning, Zinger Nation. I talked to Rob, and we're going to touch on some meme stocks. We're going to talk about some GameStop, some AMC.
Oh man.
So I think it's going to be an exciting at the open stream.
Okay. By the way, I want to mention Aaron and I do a daily podcast that if you have, if you want like a 5-minute update, they're on about 5 minutes, right? AB, is that right? Yeah.
Yeah, the one today is 6 minutes. I'm actually going to post that right now.
Okay, so AB and I do a daily like market recap. It's supposed to be 5 minutes or less, and it's supposed to be like super casual and unrefined in the sense that Aaron and I just sort of hit the record button, and whatever comes out of our mouth comes out of our mouth. It's not like the most structured thing, but that's the way we like it. So it's called what is
Ring
it
the
called?
bell. Let me drop the link
Ring
in
the
the chat
bell.
once I get this.
Yeah. It's on wherever you get your podcasts. It's on Spotify. It's on Google. It's on iTunes. It's wherever you get. It's on all the major podcast platforms. Ring the bell from Benzinga. Check it out. It's Aaron and I for like 5 minutes per day, just like going through the biggest headlines and news from the previous day. So check that out. and you're going to post the link in chat. Okay. What else is on your radar here, man, this morning? Anything?
I mean, I was looking at if Amazon was moving.
Actually, can I interrupt my own question? Interrupt here. Did you saw the GameStop page, right? The NFT page.
I did not. Was that the game thing you were talking about?
Yeah, that was the NFT thing. So
I heard you talking about it. I didn't get to see it.
Here, I'll bring it up. Do you think this is real? Do you think this page is real? I just want to.
Is it on GameStop's real?
It's nft.gamestop.com.
nft.gamestop.com.
Yeah. And then if you click on the little dot, the little pixel on the top right, it brings you to that game I was playing, which I'm not going to do again. Here's the Ethereum code.
So I don't know. I mean, it could either.
Yeah. Go ahead.
It could be someone that's just trying to be a savvy GameStop investor that wants to make it look like they're doing something with NFTs. But I think if once GameStop does get involved, if they do in any NFT stuff, we'll see some official press releases and whatnot from the company. So we'll see. I hope it's real. It looks cool.
Well, it's up 30% now in the last 24 hours. So it's at 234 here this morning. What else? You said you're watching Amazon because of the MGM thing?
I just was seeing if it was moving pre-market, which it didn't look. It looked like it was up 0.5% or something last time I checked.
No, yeah, it's not really doing much. I mean, it's up, but I mean,
Amazon is so big that no matter what they do, their moves will have more of a negligible move on their stock price compared to other stocks.
For sure. All right, let me just run through my list and see if there's anything that I missed from this morning. We didn't cover GWN, Nordstrom. Their earnings were, again, not comparable to estimates, really. Actually, I think their EPS came in a smidge light. There must have been some adjustment there. They reaffirmed their sales growth guidance of the year, 25%. They say that digital sales increased 28% in the first quarter. The stock is down, though, this morning in the pre-market session. At least it was last I checked, and yes, it still is. So we didn't cover Nordstrom. What else didn't we cover? That was on my list. We didn't cover... Actually, that may have been it. I had a relatively short list of stocks this morning. We didn't cover Urban Outfitters. We didn't cover Toll Brothers or Intuit. They also reported. I saw when I came in this morning, was at the top of my up movers.
What was that, Spencer?
Build-A-Bear.
BBW.
Yeah, it was like number one or number two on my up filter this morning. They had earnings, but it's not now. But every time I see that stock here, let me bring up a chart so we can look at that. Well,
people were playing it as a reopening mall play.
Yeah. Where's my chart here?
I think Build-A-Bear actually is from St. Louis. I think originally. I don't know if it's still headquartered there, but
that's where you're from, right?
Yep, St. Louis, Missouri.
Cool. What else? I think that was it. Let me check the other chat. I didn't cover UPS. Sorry, I missed that in the chat. There's a few others that I missed. Joel's covering a few in chat right now, and we'll cover more throughout the day. If you have a question, you don't have to get it answered on pre-market prep, right? We have Rob Roy, as I mentioned. He's super engaging in chat. You can ask him your questions in about 10, 12 minutes from now. We got SPACs Attack at 11. I'll be on today again with Chris Kachi, filling in for Mitch Hodge, who is out for the next couple of days. We've got the Power Hour. Who got in the Power Hour today? AB, we got two guests, right? We got the CEO of Genius, right? Andy Hayward.
Yep, that's right now. I think that's what we're sticking with.
Okay.
We might bring on another second surprise guest, but for right now, that's it.
Okay. Get Technical at 1. Samantha Leduc is on today, I believe. Is that correct?
Correct.
Okay. We got Moon or Bust, which is our new crypto show focused on altcoins. So they don't really talk about Bitcoin too much. They talk about everything else. If you're super into SafeMoon and all the other random I don't want to say crap, but a lot of it is crap. Random stuff in the crypto space. Moon or bust at 2:00. Highly, highly, highly recommended. Basically, Benzinga has like a group of people here that are like super obsessed with this stuff, and this is literally all they talk about all day. So they were like, let's just do a show. So that's the show, 2:00 Eastern time, right here on Benzinga's YouTube, Moon or Bust. We've got First Trade, which is our show specifically for new traders on at 3:00. We got the At the Close show at 3:30, and we'll wrap up the day with some aftermarket therapy later on in the evening.
Sounds like we got a packed day.
We do have a packed day. So drop us a like if you haven't already. Hit subscribe, please, and you could win a free share of Tesla when we cross 100,000 subscribers. Link in description, link posted in chat to the contest. Check it out. Yep, it's down there. That's exactly right. And if anyone has any ideas for any more shows, we've had some people reach out to us with some ideas, and we are very, very appreciative of those who take the time to do that. Tweet at us. My handle is up on the screen at SJ Israel. Even better though, email us. Email shows@benzinga.com. Don't email me personally because that's just annoying, and we have a thing here about reply all. It's better to have more than one person on an email chain. And if you email shows@benzinga.com, it goes to me, it goes to AB, it goes to Mitch, it goes to all the producers here at Benzinga. And the more people involved, the merrier. So shows@benzinga.com. If you have any feedback, any ideas for new shows, if you're like, hey, I've got an audience, then email us and we'll talk about it. If you want a live trade, especially if you want a live trade, drop us a line. AB, any other final thoughts? We've got Robert Roy in like 8 minutes or so. So I want to hop off before that and give the people a short break, and then this stream will redirect to that. But any final thoughts before we hop?
No, I'm watching. It looks like crypto is kind of moving this morning. Ethereum back up. So that was something I was watching, because I've had a theory the past couple of weeks with crypto, where if crypto is doing well in the morning, it seems like it's going to be a good market day, and vice versa. I don't know if there's a correlation there or what, but it seems like the days where Bitcoin, Ethereum, and all those are down, the market's down a little bit too. So I have a good feeling about today because we've been seeing some green in crypto. I think it was more overnight than this morning. Billy James in the chat is asking what time is Power Hour. That's at noon Eastern, so 12 p.m. Eastern. We will be live on the Power Hour, as we are every day. Mr. Hot Stocks Luke, CEO Jason Raznick, and as we mentioned today, we have Genius CEO Andy Hayward.
Yep, Andy Hayward. All right, guys, smash that like button if you would be so kind. Are we at 500 likes today? I want to get to 500 likes. We are not. We are just shy. We're at 435. Let's get to 500 likes as I wrap up. Please remember, all the information from our show, from all of our shows actually, are meant to be used as informational purposes, not for investing or trading advice. If you want a free trial of Benzinga Pro, it is our real-time news and research tool that I use, that AB uses all the time. Go to pro.benzinga.com. If you want more than that, you want a discount, enter the code YouTube20 to get 20% off any Benzinga Pro subscription. If you want to become an affiliate, you want to get paid for sending Benzinga Pro or sending people to Benzinga Pro, you can go to the link up on the screen right now, benzinga.partnerstack.com. That is our affiliate page to become a Benzinga Pro affiliate. Thanks to our guest today, Chuck Self. And that'll be a wrap here on PreMarket Prep. So again, this stream will redirect to Robert Roy, which is going to start in about 5 minutes. And you shouldn't have to do anything. Maybe just hit play when it starts. And that's it. So everyone, thanks for watching. Are we at 500 likes? We're almost there, so I'll call it a day. Everyone, good luck at the open in your trading. Good luck throughout the day. I'll see you later on in SPAC Stack and AB. I will see you on Robert Roy.
Yep. And thank you for having me on Pre-Market Prep, Spencer. And Zinger Nation, stick around for live watch list at the Open with Robert Roy. Should be a great show. I'm excited. See you there.
All right.